Morning, everybody. I'm going to move pretty quick through our presentation because there's a lot to cover and want to talk about specifically some of the recent acquisitions that we've made. Ely Gold Royalties is a junior royalty company focused in Nevada, specialize in precious metals. Almost all of our assets are gold. Forward-looking statements we'll be making. Just to give you a quick idea, we've got about 111 million shares outstanding, a little over 4 million cash, about 1.8 million in debt, and $5,000 undrawn on a line of credit. Institutional holders in the stock are Rick Rule and Eric Sprott is our largest shareholder. I talk quickly about the royalty business. In general, it's just for several reasons here. Gold royalty companies is the best way to invest in gold and get. If you're looking for an equity investment, they get to give you leverage over just the price of gold. And the reason is that the royalties come right off the top in most cases, and right. So it's actually the money that is paid at the smelter. If you have a 2% net smelter royalty, after those smelter charges, you get 2% of that flow. So you don't pay for exploration, expansion. Your operating costs don't go up. It's just a great way to own gold. And you see by this chart that 3 top gold royalty companies over the last 10 years have actually outperformed the S&P. When you look at royalty companies, there's 3 tiers. The top tier are $5+ billion market cap. The biggest, Franco-Nevada, is $25 to $30 billion. They've been around a long time. They do most of their investing or purchase most of their royalties by being part of the large financing package that builds the mine. In the junior space, in the mid-tier space, trade a little bit of discount. They have more development type of royalties, but still are financing at the mine level. Now, when you get to the junior space, this is where we're considered with about $100 million market cap. And it's a little harder to value there. You have to look at the assets. It has a lot more to do, rather than with cash flow and net asset value, is what's this portfolio going to look like a couple of years from now. And so the important things when you're comparing and looking at the value in junior royalty companies is looking at management and their business model, and are they executing on their business model? Is the stock going up and trading more as the company adds assets? Is there increased liquidity picking up in the stock? And if they are paying a dividend, which generally the junior royalty companies, a few of them pay a small dividend, but you always want to watch to make sure that dividend is actually covered with royalty income, not being paid for just out of the treasury and through equity offerings. On this chart, you can see that especially the 2 on the bottom are Royal Gold and Franco-Nevada, 2 of the major companies. And this just shows a period of 93, the slide on the far left there for Royal Gold. From time in 93 when the pipeline discovery was first made, and they exchanged their joint venture interest for a royalty, and pretty much just had that one royalty, and the stock went from 20 cents to about $12. Of course, today that stock's about $110. Franco-Nevada also up 2,700% in its first 4 years. So the point I'm making with this slide is that junior royalty companies is where you really can make a lot of money and get a lot of leverage. That all the royalty companies, even the majors, really performed well, up to anywhere from 2,000 to 4,000% early in their development of the portfolio. And that's because at that stage, every transaction moves the needle for the company. When you look at Ely Gold Royalties compared to, again, our peers in the industry, we use Abitibi and Metalla, 2 pretty well-known names. We compare, if Look at starting from the bottom, we have a nice sized portfolio, 42 royalties with 3 producing. By the end of this year, we'll have 5 producing. And then on the revenue side, we also compare very well with those companies. Yet, as you can see, we're trading at a fraction of their market cap, less than half of Abitibi's and quite a bit less than, more than 2 times the Metalla. The other thing you look at on this slide is our business model. Abitibi is pretty much a static company. They're paying a good dividend. They have 1 major royalty. They're not really out purchasing royalties. Instead, they're buying in their stock and paying a fairly healthy dividend. Metalla is purchasing royalties, and the difference with us is that we both purchase royalties and we originate royalties. Our origination program is where we are staking and acquiring claims, mainly in Nevada. We sell those and then keep a royalty. So on the exploration origination side, for the longer term royalties in the portfolio, we're not out there buying those like our competition. We're actually generating those, getting paid for the properties, and retaining the royalty. So this slide will give you an idea of our current 2019. We did a little under $4 million in revenue, and that's climbing at a nice pace. This slide does not include an acquisition that we announced late last week. So I'm talking about that 2-prong approach here. I've already covered it. We both purchase royalties, but the royalties we purchase are near or term or producing royalties. And then we have the royalty generation program to generate the royalties that are longer term. Talk about we made a transitional acquisition for us, announced this week. We bought 5 properties actually that were in a small company, VEK Associates. These are some of the prospectors that back in the 70s and 80s staked some key ground, and so what we've picked up is a royalty at the Gold Strike Mine extension, the Wren deposit, a royalty at the Marigold Mine, exploration ground at Pinson and Lone Tree, and some other scattered Carlin Trend claims. These 5 leases all have a 3% royalty. We bought the company that owns 50% of that. So other than the Marigold, we have a 1.5% interest on these claims. This map shows you the Wren claims, and just to look there at the Gold Strike, the big, should the pointer here. This area here produced over 54 million ounces of gold. They're currently mining right up in here underground and moving on to our ground here over the next couple of years. This deposit right now is about 2 million ounces, but we expect it to get much bigger when they get underground and do the exploration there. The Marigold, you can see here, our claims, we got 3 claim blocks here, but the main one is here. It's these 2 pits that are in the current mine plan, and those will be mined between 2022 and 2028. Another key acquisition we made here and just announced in the last 30 days was a 0.5% NSR on the Jarrett Canyon royalty. So that's producing about 135,000 ounces a year and will pay us just about $1 million US on our royalty. You can see from this slide we're pretty proud of. It shows all the companies that we're doing business with. Just about everybody in Nevada that's working there has one of our properties, either in our royalty portfolio or our sale portfolio. I'm not going to talk about each one of these individual royalties because I'm running out of time here, but I'm just going to skip through, and you can come by and get this, pick up this presentation. And, I'm just going to say that, we've already more than covered our goals that we had set for this year. So with that, I'm right out of time.